Digital currencies pose a threat to economy, warns Bank of England. Let's see. Digital currencies pose threat to economy, warns Bank of England. Research shows high street banks could face a flood of withdrawals, leading to financial instability. Right. The rise of digital currencies could lead to a flood of withdrawals from high street banks, risking financial stability and the wider economy, the Bank of England has warned. Threadneedle Street said that stablecoins, a new form of digital asset usually pegged to the value of a traditional currency, would need to be regulated in the same way as payments handled by banks if they become widely available. Stablecoins are similar to Bitcoin, the most prominent digital currency, but do not suffer extreme price movements because they are designed to move in lockstep with government backed currencies such as the pound or euro or commodities such as gold, which are less volatile. While these few forms of money can be issued by private companies, they could also be issued by central banks such as the Bank of England. Most UK households and businesses already use central bank money in the form of cash and private money in the form of bank deposits. The move from the bank comes as the digital currency project backed by Facebook, previously known as Libra, plans to offer a stablecoin linked to the pound. Wow. Hold on a second here. Let's back up a bit. The move from the bank comes as the digital currency project backed by Facebook, previously known as Libra, plans to offer a stablecoin linked to the pound. Let's hear. It also plans stablecoins linked to the dollar and euro. Right, so the digital currency project backed by Facebook plans to offer stablecoins linked to the pound, stablecoins linked to the dollar, and linked to the euro. So Facebook is backing up currencies, digital currency stablecoins are linked to the pound, dollar, and euro. Basically, one of the top three main currencies, as also as well as a coin pegged to a basket of different currencies. Publishing a research paper assessing the impact from widespread adoption of new currencies, the bank warned that large numbers of customers moving their deposits away from current and saving accounts and into digital assets could undermine the stability of high street banks. Well, digital asset investor has predicted a long time ago, and not just him, uh, because the model of the high street banks is basically to keep some small amount of the deposits in the bank, like a very small, very low amount, and being able to lend loads of money. But the more and more money are going out of the normal high street banks, the less money they can lend out, etc., etc. So it's a huge problem for them. setting out a scenario where a fifth of UK households and businesses moved their deposits into digital money. A fifth of UK households and businesses moved their deposits into digital money. It said this could drive up the costs for high street banks because they would lose a key source of funding. Well, that's the only source of funding they've got. This would in turn affect the cost and availability of borrowing. Yes, but you've got alternatives, which is DeFi. The bank said widespread use of private stablecoins could affect its ability to set interest rates. Good, because we don't want the bank to set the interest rates. We want the central bank, to have less and less control over the money, basically. A key tool used by the central bank to manage inflation. Oh wow, really? Well, if your money are not in in the normal system, why would you care about inflation? Your assets are not gonna be inflated if they're limited in supply and the demand is growing. You're not gonna be experiencing inflation. You're gonna be experiencing a deflation over your own money. Yeah, maybe the rest of the market, which is not in, the people who are not involved into cryptocurrencies, they're going to be experiencing huge inflation compared to the ones who are involved. But yeah, and the conditions for economic growth. What kind of economic growth? There is no economic growth. People were locked up at homes. There was no productivity going on. It said the overall impact on lending and credit provision would probably be relatively modest. Okay, let's hope so. But there was a large degree of uncertainty. Exactly. The bank is exposing whether to launch a central bank digital currency. Oh, so now the UK bank is exploring whether to launch a central bank digital currency. Oh, so that's oh oh right, yeah, I get it now. So they're basically using the fear and the problem reaction solution method. Like, oh god, here we go. The economy is going to collapse. So let's issue a central bank digital currency to save the day, right? Dubbed by the Chancellor Rishi Sunak as Bitcoin, however, it said it had not made a decision about whether to proceed, but was looking into the risks and opportunities of doing so. Right. Andrew Bailey, the bank's governor, said the prospect of stable coins and central bank digital currencies needed to be carefully considered by central banks, governments, and society as a whole. Well, they're going to create them regardless of what we think, but they're trying to manipulate our thought process with articles like that so that we want them to issue central bank digital currencies. It is essential that we ask the difficult and pertinent questions when it comes to the future of those new forms of digital money. Some economists argue that the central bank creating digital currency would serve as a quasi nationalization of the banking sector. Nationalization of the banking sector. I'm not sure what they mean saying that, in part because consumers could go directly to the Bank of England to deposit funds and make payments. However, this would depend on the features of central bank digital currency and whether it was offered to consumers directly by Threadneedle Street. Hmm. ETI Katz, a financial regulatory partner at law firm Ashurst, said the rule of high street banks was an essential component for financial stability. Or was it? Wow. Wow. Any suggestions that digital money can involve direct relationship between the central bank and retail customers has the capability of causing a major systemic shock, and it is not clear how banks can adapt their funding models to this development, he said. Hmm. Right. Well, here we go then. Ripple comes into the play with the liquidity issue solving on one hand. And on the other hand, well, sorry, banks, but we're going to transition into digital world with digital assets, and yeah, you definitely need to have a digital central bank currency, obviously, or otherwise you just disappear. Others believe a central bank digital currency would ensure a more democratic and sustainable financial system was built amid the rapid growth of cryptocurrencies and online platforms. Right. Simon Yu, the head of policy and advocacy at the campaign group Positive Money, said, with the decline of cash and emergence of private digital currencies, we urgently need a new form of public money in the form of central bank digital currency to ensure that we aren't surrendering the future of money to unaccountable private interests. A central bank digital currency would open up access to our central bank to everyone, taking away the unique privileges enjoyed by private banks and ending our reliance on them to manage our money and make payments. Right. Well, central bank is a private bank. Maybe not in England, someone said, but in most of the countries, central banks are private banks. So I don't know. Right. Well, I don't know what to say. But you see how the narrative about digital currencies, central bank digital currencies, is being played already. I think I'm gonna wrap it up for this one, and see you in the next one, guys. Don't forget to subscribe, like the video. Shows massive support, and you're gonna keep you up. It's gonna keep you updated every time we post another video. So that's it for now. Have a nice one. Cheers.